Dear students, welcome to my channel. In this video, I have explained 12th Accountancy, Chapter 1 Incomplete Records, Exercise Sums 10 to 13. Don't skip the video, watch fully to understand how to work out these sums by yourself. If you have not subscribed my channel, subscribe and share with your friends. Accounts for incomplete records. Ascertaining profit or loss and financial position is very important for every organization. Here, business organizations which maintain incomplete records, profit or loss is calculated through two methods, statement of affairs method and through final accounts. In statement of affairs method, capital at the beginning and capital at the end of a specified period were compared and profit and loss is found out. In the second method, preparation of final accounts, as the books of accounts are incomplete, information regarding revenues, expenses, assets and liabilities is not known fully. Hence, it is difficult to prepare final accounts. But with the available data, the missing figures can be found out and then final accounts can be prepared. See, if the opening capital is missing, then by preparing statement of affairs, we can find out opening capital. If cash items such as cash purchases, cash sales, or any other items missing, then we prepare cash book. So by that way, we can find the missing cash items. And total debtors account. This account is prepared to find out credit sales. This credit sales and credit purchases we need to record in the trading account. Trading account is what is the meaning of the trading account? It is the difference between the sales and the purchases. All purchase related expenses will be shown in the trading account. So we need to prepare trading account, you need sales and purchases, so that we will find cash sales and cash purchases or find out by preparing the cash book, and then the credit sales find out by preparing the total debtors account, and by preparing total creditors account we find out credit purchases. And bills receivable, to know the balances of bills receivable during the year, uh, and the bills payable, the balances of bills payable accepted during the year. And then with all this information, final accounts will be prepared. Final accounts, you all know, it has the two parts, trading and profit and loss account and balance sheet. Now, before seeing that, I just wanted to explain how debtors and bills receivable arise. See, when the business sells goods on credit, okay, that is credit sales. When credit sales are made, debtors will come. So debtors are a group of customers who are yet to make payment for services or goods provided to them. The business has sold goods to them without receiving money. So these debtors will pay the money after a specified period. They would have asked for the credit period time. Okay, so the debtors will arise when the business is selling goods on credit sales. And when the business when they sell all the goods on credit, then it also requires money. So the business will draw a bill on the debtors. So when a debtor accepts the bill drawn against him, the debtors converts into bills receivable for business. See, why the business is drawing bills on the debtors? Because it gives some time for the debtors uh, to make payment, and in the meantime, if the business needs money, these bills receivable can be converted, it can be liquidized, it can be converted into cash by discounting the bills with the bank or with the financial institutions. Okay, in that way, yeah, for that purpose only bills receivables or bills are drawn on the debtors. So these debtors and bills receivables are connected, and these two arise when credit sales are made. So credit sales are made, when the credit sales are made, debtors are coming. So when the business is drawing bills on debtor and the debtor also accepting the bill, then these debtors will be converted into bills receivable. If the bills receivable on the maturity date, if the bills receivable is not honored, that is, if it is dishonored, then again it is converted to debtors account. So that only we are going to see in this preparation of total debtors account and bills receivable account. Now first we'll see the formats. First total debtors account. See, total debtors and bills received both are personal account only. Now see, total debtors, it has a debit balance. So debit side is the starting uh, side. Okay. So opening balance you have to show on the debit side. Debit side, this is opening balance of debtors. And then on the debit side, the items which increase because the debtor has a debit balance, isn't it? So all the increasing item, the items which increase the debtors will be shown on the debit side. When the business is doing more credit sales, the debtors will be increased. Okay, when the debtors have made payment by check, but the check is bounced, it is dishonored, once again he will become a debtor. Okay, I told you if the bills receivable is dishonored on the maturity date, then once again he will become a debtor. Okay, you must try to understand the opening balance and the credit sales and bank, that is check dishonored, bills receivable dishonored. So these are the items will be shown on the debit side. And next is when the debtor starts to pay the money, then the debtor's amount will be reduced. So on the credit side, whatever items reduce the debtor's account will be shown. On the debit side, items which increase the debtor will be shown, and on the credit side, when the items which decrease the debtors will be shown. See, when you start receiving cash from the debtors, that will reduce the debtors account. Okay, so cash received will be shown on the credit side, and some customers may pay by issuing the check. So when we receive check, so bank account we should write, and then when we uh, motivate the debtors to make early payment, so we give discount. So discount allowed will also reduce the debtors amount. And next is sales return. Okay, when the sales return, when the goods are returned by the customer, that will also reduce the debtors amount. And bad debts, when what is the meaning of bad debts? When the debts are irrecoverable, that is, when the bad debts happens, then that will also reduce the debtors amount. And next is some debtors who have accepted the bill, and from them we are receiving the bill. Okay, they accept the bill and they give it to us. So bills receivable, those debtors who have accepted the bills receivable will be converted to bills receivable, and they will be maintained in the bills receivable account. Okay, this amount, we prepare bills receivable, from there we will transfer this amount here on the credit side of the debtors account. See, some debtors have gone to the bills receivable account because they have accepted the bill. Okay, so that will also reduce the debtors account. And now the closing balance. So now you have to balance, and here we will be finding the credit sales as a balancing figure. Now few sums are very easy. See, first sum is very easy. When you read the sum, no, you have to see whether any details given regarding bills receivable. If nothing is given in the question, then there is no need of preparing bills receivable. See, in this question, Find out credit sales from the following information. Here, when you read the sum, debtors on 1st April. This is opening debtors and then cash received from debtors and discount allowed and returns inward, that is sales return, and debtors on, this is closing debtors balance. So here there is no information regarding bills receivable. So we can directly prepare only the total debtors account. Now you have to write total debtors account. Debit credit you should write. I told you earlier, total debtors, the debtors has a debit balance. So you have to show the opening balance on the debit side. So now the amount is 1 lakh. And now next is you have to write the cash received from debtors and then discount allowed, return inward and closing balance of debtor. Now you have to put the total. 3,80,000. Now you have to show here also. When you balance these two, see 1 lakh and 3,80,000, when you subtract, the remaining is the credit sales. So like this you have to do the sum. When there is no information about bills receivable, no need to prepare bills receivable account. Let us do the second and 11th sum. See here, from the following details, find out total sales. What is total sales? Total sales is cash sales plus credit sales. See, the business would have sold the goods for cash and they have sold the goods for credit. So both when you add together, it will be a total sales. When you are asked like this, total sales, you need to find out the credit sale, because what is the formula for the total sales? Cash sales already given here, and with this information you have to find out credit sales. So remember children, you don't put cash sales anywhere, only after preparing credit sales you have to write it at the bottom of the total debtors account and you add cash sales plus credit sales. That will give you a total sales. Now we'll see the here also in this sum also there is no detail given about the bills receivable, so no need to prepare bills receivable account. So total debtors account, debit credit you write, and opening balance you have to show on the debit side. 1,30,000, cash received is 4,20,000, sales return 35,000, bad debts 15,000, closing balance 2 lakhs. And now you will put the total on both the sides. Now the difference between these two is credit sales. Now we are asked to find out the total sales. What is the formula for total sales? Cash sales plus credit sales. So cash sales already given in the question, 4,60,000, and this credit sales 5,40,000 you have to write. When you add these two you will get 10 lakhs. Now next, before seeing the 12th sum, we are going to see the format of bills receivable. Bills receivable is also a asset item and then it has a debit balance. So you have to start the opening balance on the debit side, and here when the debtors are accepting the bills, okay, bills receivable will be increased. Okay, whatever item is will increase the bills receivable will be shown on the debit side. When more debtors are accepting the bills receivable and when we receive bills from them, then that will be shown on the debit side. And next is when they start paying the bills, okay, either cash or bank, that will reduce the bills receivable. So we will write on the credit side. And sundry debtor, sometimes when the bill is dishonored on the maturity date, once again they will become a sundry debtors. Okay, then we need to convert them and we have to transfer them to the sundry debtors account again. So that you should write sundry debtors account, bills receivable, dishonored, and this is closing balance. Now see here, these two sundry debtors you have to transfer to sundry debtors account and you should write it as a bills receivable there. Okay, first we'll see only the bills receivable. Here the question is, from the following particulars, prepare bills receivable amount and compute the bills received from the debtors. From how many debtors we received the bill, that we have to compute. See, opening bills receivable given, at the end of the year bills receivable, cash received, and some bills are dishonored. Now we'll see how to do this. You have to write the bills receivable account, and then debit credit you should write, and start opening balance on the debit side, and cash received 3,90,000, and the bills which have been dishonored you should write it as a debtors account or sundry debtors account, and then closing balance, and then put the total on the both the side, and then now you have to find the difference between these two. Will give you the debtors who have accepted the bill and we receive bills from them. Like this you have to work out. And in the 13th sum, calculate total sales. Total sales, you please keep it in your mind. It is cash sales plus credit sales. So here you have to find out the credit sales. Cash sales already given in the question. See, it is here. Now with this information we have to find out the credit sales. Here when you read the sum, you will find that you are finding the details about the bills receivable account. Okay, so first you have to prepare the bills receivable, and then only you have to prepare the total debtors account. See, bills receivable opening balance, cash received from debtors, cash received from bills receivable, bad debts, bills dishonored, returns inward, and closing balance. We'll see the sum. First we should prepare the bills receivable. First we are showing the opening balance 60,000 and cash received 1,60,000. Debtors, this is bills receivable dishonored 15,000, closing balance, and you have to put the total. Now you will find the debtors who have accepted bills receivable. These two debtors, you have to show in the debtors account as bills receivable. Okay, now see total debtors account. First we are showing the opening balance, bills dishonored, and cash received, return inward, and then bad debts. The bills receivable which we found in the bills receivable account, and closing balance of debtors, and put the total, and you will get the credit sales. Now credit sales we have found. Now what is the formula for total sales? Cash sales plus credit sales. So cash sales is 3,15,000 and credit sales we found out 9,85,000. So total 13 lakhs. Students, I want you to know that the bills receivable account here I have given, which we prepared earlier. From this you have to transfer this. Here we are showing on the debit side. This you have to show on the credit side. Don't forget this amount. You may wonder from where it came. It is from the bills receivable. Okay, and then another one, bills dishonored, which you have shown here, will come here. Bills receivable debit side you have shown, that you have to show it on the credit. The dishonored bill which you showed on the credit of the bills receivable, you should show on the debit side. Students, I hope you understood these sums. You can do by yourself. You practice. Even you can practice illustration sum, and then you can practice the exercise sum. Thank you for watching.